Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. We're going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up DailyFX.com. And usually the first thing I do when I get there is click on Jamie's technical report. So let's see what he has to say. Another record-breaking day in the currency markets. It's starting to be the norm here. But let's see what he has to say in a purely technical sense to try and make some sense of all this volatility lately. While multiple counts are still valid in the euro-dollar, the pound-dollar count has cleared up. There are good opportunities in this pair to start October. So let's go down, scroll down, and see what he has to say specifically about the euro-dollar. There remain a number of possibilities. While not clearly an impulse move down, the decline from near 149 is deep and accelerating. But I want to focus on one of the things he says towards the end here. The larger correction scenario is still possible, triangle or flat. Until a break of 138.77, we cannot eliminate bullish potential. And that's actually, as Jamie correctly predicted, the euro has fell, and I was in agreement with him earlier this week, and we could see that it has happened extraordinarily fast, a massive down day today. I believe one of the largest, if not the largest, on record. So let's go ahead and pull up the chart and focus on that thing. And I am not to say that I'm completely turning bullish on the pair, but I think that there might be a bullish opportunity, and the risk to reward could be there. So let's go ahead, and this is the daily chart on the euro dollar, and I want to zoom in a little bit closer. And now, obviously, we've had an enormous amount of volatility, so we should look for ways to keep our risk small. So the larger correction scenario would be a correction of the move from 160 down to below 140, 1.40. So, and we could see that the larger correction scenario, this would be the A wave, and this could be a B wave bottom forming somewhere around here, which would mean an eventual C wave to equate or exceed that 148.71 high. I believe that print is right there. So how might we go about trying to identify a low-risk trade opportunity? Because certainly I'm not 100% confident in this trade, but there are ways to nibble at the market, if you will, to take a small shot at the trade, keeping our risk very defined. And one of the things that I'm doing right now is just adding a simple support line using today's low. And what I'm going to do over the next few days is wait to see if prices approach this support line. And I believe, let me give you the low print here, 140.08. So just above that 140 figure. And what I would do over the next couple of days is see if prices come down to the support line. And if they hold that support line, I might take a small long position in the pair with a stop back below the support line. Now, and I would exit on a close beneath the support line. Now, again, this is not. I don't have high confidence in this trade idea, but this is something that I am looking at. And in terms of feeling that the euro was going to move lower, I certainly didn't feel it was going to happen this fast. But now a short-term trade opportunity could be setting up. What the flaws in this approach or this trade setup that I can see is that even if prices were to hold that support line, there's not enough separation between the points on the support line, but still it could very well hold, and it could set up whether a scalping trade. Maybe you might get 30 or 40 pips off the bounce off the support line, or it could actually be the start of that C wave where we can see a much larger rally. So, for example, let's say prices come down to the support line tonight or tomorrow. Maybe you might enter a position. Let's say you take 2 mini lots, a very small position. You might exit one of those mini lots as prices rebound maybe 30, 40 pips off that support line, and then maybe hold that other mini lot just in case the pair is going to stage that final C wave of the larger correction. So that's just one scenario that I'm working on right now, of course, and once again I want to reiterate, very low confidence in the trade idea, but that doesn't mean that we can't find solid solid risk-reward trades. And in my opinion, it's worth the risk to take a shot at this trade, only because we can set a stop, let's say 40, 50 pips beneath that support line, and the upside is very large. That could be a few hundred pips in the rally if it does in fact occur. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.